Mortgage rates have barely moved this week, extending a calm stretch that has now lasted 5 straight days. During this period, the 30-year fixed mortgage rate tracked by Mortgage News Daily has shifted by no more than 1/100th%. For most borrowers, that means loan terms look nearly identical no matter which day they choose to lock. This kind of quiet performance is typical for early January. Trading volume remains light as many investors are still returning from the holidays, and the economic calendar has offered very little new information to drive markets in either direction. With fewer traders active and limited data to react to, mortgage rates tend to drift sideways rather than show clear direction. That calm, however, may be nearing its end. Starting tomorrow, markets will begin to receive a fresh batch of economic updates, including 2 labor market reports and the Institute for Supply Management Services sector report. On their own, none of these releases typically carries the same influence as the monthly jobs report later in the week. But together, they can shape expectations and begin to set the tone for where rates head next. If these reports suggest the economy is holding up well, or that labor conditions remain tight, investors may scale back expectations for future rate cuts. That scenario could push mortgage rates slightly higher. On the other hand, if the data points to slower growth or softer hiring trends, rates could drift lower as markets lean toward a more accommodative policy outlook. For now, stability remains the dominant theme. Mortgage rates are holding steady, but the risk of movement is clearly rising. Borrowers keeping a close eye on rates may soon see more clarity once this new wave of economic data starts rolling in. For direct financing consultations or mortgage options for you, visit Nadlin Capital Group. Contact us today for a tailored consultation where our expert advice turns potential into profitable reality.